Hi everyone. Hi everyone. Thank you for joining us. I'm Caroline Zakari and I work for the Office of Civics and Community Services at Los Angeles Public Library. And this is the first in a series of programs we have to support financial literacy. And it's brought to you by CSUN VITA and LAPL. And it's the Alexandra Guadiana and Diego Debashi are going to talk about how to get ready for the next tax season. And we were going to have a short Q&A after the program, so please send us your questions. And here's Diago and Alexandra.
Hi everyone, my name is Alexandra and my coworker Daigoro and I will be presenting today on getting ready for tax season.
So, the most important thing about filing taxes is to know if you have to file taxes. So, not everyone needs to file, but you must file if the following applies to you. If you're a single person under 65 and you make over $12,400, you'll need to file. If you're married and you and your spouse make over $24,800, you'll need to file. There are a lot of different variations on your filing status, so it's best to know what bracket you qualify under. Do dependents have to file? This is also a big question that we have. If your parent or any other taxpayer may claim you as a dependent, use the Chart B for dependents to see if you must file a return. In this chart, unearned income includes taxable interest, ordinary dividends, and capital gain distributions. It also includes unemployment compensation, taxable Social Security benefits, pensions, annuities, and distributions of unearned income from a trust. Earned income includes salaries, wages, tips, fees, and taxable scholarship and grants. So the big difference that you have to know as a dependent is whether your income is unearned or earned. So if it is a passive income where you're not working for it, it's more than likely an unearned income. However, if you have a job for it, you provide a service or a good, it's considered earned income. And gross income is the total of your unearned and earned income. So this is chart B that I was referring to earlier. You could see the varieties of dependent qualifications here. If you're either 65 or over or blind, you have to make a certain amount to be able to be qualifying as a dependent. Under 65 and not blind, you need to earn over 1,100 of unearned income. Your earned income has to be 12,400, and your gross income was more than the larger of the 1,100 or your earned income. So there's a lot of the times you see the word income all over the place, so it's best to know what kind of income we're looking at here, whether it be unearned, earned, and then you have to calculate your gross. So, why should you file taxes? Even if a taxpayer is not required to file a federal income tax return, they should file if any of the following situations below apply. You had income tax withheld from your pay, pension, Social Security, or other income, that means that you withheld more than you should have, so you should see if you could qualify for a refund. You made estimated tax payments for the year, or had any of your overpayment for last year's estimated tax applied to this year's tax return, meaning you overpaid and should try to see if you can get something back. You qualify for the Earned Income Tax Credit. This is on its own is a huge thing that you have to really look into what it is. So please see publication 596 from the IRS website or contact VITA to see if we have a presentation specifically about the earned income credit. You qualify for additional tax credit. You qualify for a refundable American Opportunity Credit, a premium tax credit, or you qualify for a recovery rebate credit but didn't receive an economic impact payment or receive less than the amount you are eligible for. So this is referring to, I believe, the stimulus package that passed this year, the CARES Act. If you're required to file a state return, you should file a federal return and see what happens as well. If you want to file a $0 adjusted gross income return, such as to perform a like security check so nobody steals your tax identity. A lot of the times people will be victims of identity theft, and malicious people will use their social security number to file taxes, and you won't know because you're not filing your taxes. But once you file your federal tax return, your social security is blocked off. So by doing this, you can prevent someone else from doing it later on. So this is an example of the IRS 1040 form. You see, it's pretty straightforward. Box 1, you have your wages, your salaries, capital gains. You put your information all here, your social. It's a very straightforward step-by-step box. So we talked about dependents. I'm telling you, you have to be single or married. You have to make this amount of money. But what is your tax filing status? How do you know what it is? So let's go through it. You are single if on the last day of the year in which you are filing taxes, you are unmarried or legally separated from your spouse, and you do not qualify for any other filing status. So if you're living with your significant other for 10 years, but you're not married, I'm sorry, you can tell them you're technically single. Married filing jointly is if you are married, both you and your spouse agree to file a joint return. This is important because your spouse, as well as the taxpayer, need to be together to sign the legal tax document when you're filing your tax return. In a joint return, you report your combined incomes and deduct your combined allowable expenses. Both spouses must be present. You may use married filing jointly if only one spouse had income. So if you have one spouse that stays home and one spouse that is working, you can still file as married filing joint. And then married filing separately is essentially a single document of the tax form. You're filing a single, except you're married, but you have to be separated from your partner. Head of household is generally an unmarried taxpayer with dependents, and you must meet the following requirements. You are unmarried or considered unmarried on the last day of the year. You paid more than half the cost of keeping up of a home for the year. Let me go back to the prior step. If you get a divorce legally on December 31st, 2020, you are considered unmarried for the tax year. So that's good to know. And if you get married on December 31st, 2020, for 2021, you can file as a married person, even though you're filed for married one day. So that's a key thing to know about when you're trying to figure out your filing status. A qualifying person has to have lived with you in the home for more than half the year, except for temporary absences like school. So if you have a child who, for example, dorms or goes to school across the United States, they'll still be considered qualifying and living with you because of the way the school system works. There won't always be outside of the home for the minimum amount of time. So they'll still qualify. However, if this qualifying person is your dependent parent, he or she doesn't have to live with you. So it's important to know if they're a direct parent to you, they could live separately. So what
Daigoro,
the
a
yes.
question. So a lot of the times, if you can go back to the last slide, we get questions related to tax filing statuses and FAFSA. So let's say your parents have been together for 20 years, but they're not married, and they're filing their taxes as married. What would you suggest to them to put under their tax filing status when they um, fill out their FAFSA applications?
It depends whose tax return they're using. If they're using, it would more than likely be head of household would be the proper filing status. However, that it's a case to case issue. It depends on how the parents have filed, more than likely.
Yeah, so most of the time we just recommend that whatever you have on your tax return, you put on your FAFSA. They might sometimes ask for a marriage license. So that's why we always say to only say you're married if you are actually married. So that's a common question that we get.
Hmm. Thank you. So, what does head of household entail? To be considered unmarried, you must fit the qualifying criteria. You file a separate return. A separate return includes a return claiming married filing separately, single, or a head of household filing status. You paid more than half the cost of keeping up your home for the tax year. Your spouse didn't live in your home during the last 6 months of the tax year. Your spouse is considered to live in your home even if he or she is temporarily absent due to special circumstances. Your home was the main home of your child, stepchild, or foster child for more than half the year. So this is referring to qualifying dependent child. If they were gone for 5 out of the 12 months, they can still be qualified. You must be able to claim the child as a dependent. However, you meet this test if you can't claim the child as a dependent only because the non-custodial parent can claim the child. So this is if you are sharing custody with your child. So what is next after knowing your status? So after knowing your tax filing status, prepare your documents to file your tax return. So you'll need a proof of your ID, a photo ID. It could be your state ID card, your driver's license. You will need your social security card for you, your spouse, and your dependents. An individual taxpayer identification number, which is an ITN for short. Assignment letter may be substituted for you, your spouse, and your dependents if you do not have a social security number. So this is if you are a resident living here and you do not have a social security number, you would file the form to get a individual taxpayer ID number, which we can do for you while you file your taxes. So if you are filing an ITN, you will need proof of foreign status and all needed documents. There will be a variety of documents needed for ITNs, so it's best to go to a separate presentation to figure out how to get that done. And also, we can send out PDFs to anyone that is interested in learning about filing with an ITIN. You will need birth dates for you, your spouse, and dependents on the tax return, your wages and earning statements, such as Form W-2, W-2G, 1099-R, 1099 miscellaneous from all your employers, as well as your passive income, such as interest and dividend statements from your banks. Health insurance exemption certificate, if you have received it. I think it is Form 1095B. So, what is a W-2? A W-2. Hmm?
Isn't this my part?
Oh yeah,
Okay,
got a
so
little excited.
what is a W-2? So a W-2 is what an employer sends out around tax season. So if you work for someone, they will send you a W-2 because when you have an employer, you pay for half of your FICA taxes and your employer will pay for the other half. So like self-contractors, they have to pay the full 14% of that tax. So a W-2, like I said, it does not include contractors or self-employed workers. They must send you your W-2 before January 31st. So usually everyone gets their income forms from their employers within the first month of the year. Once you get all your forms, you can start to file your taxes. So the W-2 represents previous year financials. So for this upcoming year, it'll be all the money that you earned for this past year that we're in currently. Next slide, please. So right here is an example of a W-2 form. All income forms or tax forms are pretty simple. To the left side of it, it's going to have the employer information, your information, their numbers. And then on the right side is usually where it has all the wage numbers and taxes and things like that. So I know these forms can look a little overwhelming at times, but all you have to do is just read the box. So number 1 says wages, tips, and other compensations. Box 1 is where your whole income will be from that employer. And then the other boxes have other numbers, but what's most important is number 1, box number 1. So what is a 1099 miscellaneous? So 1099 miscellaneous is a form for miscellaneous income. So it's given to the taxpayer who has completed a variety of work. It's used to also have non-employee income such as payments to Uber and Lyft employees. So a lot of the times, Uber and Lyft employees will have a 1099 miscellaneous, and then they'll have another 1099-R form. So they actually separate their bonus because at times when there is a high demand but low drivers, they get more money for being out there and actually picking people up and driving for the app. So most of the time it's a 1099 miscellaneous with all their income, and then they have a separate one for their bonuses. This also goes for food and delivery drivers like Uber Eats or DoorDash. Ground maintenance workers. So if you think about it, let's say a janitor cleans an office, they are not an employee of like the firms or companies within that office or for the office building. They're just paid by the owners that own the office to clean. So they get like, they're self-employed. This might be different if, for example, they work for a cleaning company and then the office contracts the cleaning company. So then the cleaning company would give you a W-2. But most of the time, it's a 1099 for most self-employed gigs. So barbers, hairdressers, cosmetologists, carpenters. But now this form is now being replaced by a 1099 NEC. So this is the form, the miscellaneous, which is now going to be replaced with the NEC, which we have in a couple slides. So like I said, on the left side, usually all of the payer information, and on the right side, you can see usually that it's like box 3 with the other income. It'll tell you how much you made. The thing about 1099 miscellaneous is that you haven't paid taxes on this money yet. So that is what you're going to pay taxes based off. And it's going to be at the 14% because you don't have an employer that will pay for half. So most people, we go ahead for the next slide. I'm sorry. So as it says here, like documents at the bottom to keep handy for your Schedule C, make sure you have all your gross receipts. So that's how much money you made for self-employment. And then expenses. So let's say for the form before, you want to make sure that, oh, well, I had these expenses that I used for my business that I needed to buy these expenses so you can pay less tax on your total income. So self-employment income, it's now going to be reported on the 1099 NEC, and the income is reported in box 1 like most forms. Being an independent contractor or self-employed will require a Schedule C to input your business expenses. So like we said, the gross receipts, for Uber and Lyft drivers, we have to know how many miles you have driven. Usually it tells you on your Uber and Lyft app, but I know it doesn't take into account after you drop someone off and you're roaming around maybe for a mile or two before you get to another person. So we also consider that as well. So we usually add about a mile or two per client that you've picked up to add to your mileage, because it only counts the miles while you have someone in your car, but you're still on the job and working, so that mileage counts if you didn't know. And then business expenses if applicable. So here's an example of the new form. So like I said previously, all the information is on the left, and like they said, on box 1 will be the compensation that you have gotten. Okay, so educational credits. So this is really important, and this is a question that we get a lot of, especially at CSUN, because a lot of students get FAFSA and there's educational credits. So if you have any questions about this, please drop it in the comments so we can address it at the end of the presentation. So there's 2 types of educational credits. There's a lifetime learning credit, and then there's an American Opportunity Credit. So the way to think of it in a simple way, the lifetime learning credit you can use forever, anytime you're in school. The American Opportunity Credit is mostly for undergrads, and it's only good for 4 years. So usually what we recommend, some people who start off in a community college, we tell them to use their lifetime learning credit. And then once they transfer to a university where the tuition is more costly, to use their American Opportunity Credit because it claims more. But for the lifetime learning credit, so it's like a dollar for dollar credit. So it allows you to claim a credit of up to $2,000 on qualified education expenses. So let's say you spend $2,000 in school, you're going to get a $2,000 credit. So it's non-refundable, so you won't get money back, but it reduces what you owe. So it's good for post-secondary education and any courses to acquire or improve job skills. One thing that is important to know about both credits is if you have ever been convicted of a felony or any crime, you're not eligible for any of the educational credits. Um, and then it's eligible if you've paid for qualified education expenses and if you're considered an eligible student for at least one academic period beginning in the tax year. So like it said, you have to be in both semesters you have to have been a student. And then something that is important to note about expenses. So for example, at CSUN, students want, like, we pay for parking, right? Parking is a couple $100s. It's not very cheap. So they ask, oh, can I deduct, is that like a qualified education expense? Can I deduct my parking permit for the year? Unfortunately, it's not, because you don't need a car or you don't need to park in order to go to school. So the way to make it very simple, to understand whether or not it's a qualified education expense is if you needed it to go to school. So tuition, money you have to pay to get classes, is a qualified education expense. Any internet access like homework, that they ask you to pay for, like with a class, in order to get a grade on that work, that is qualified education expense. Let's say you have to get a fancy lab coat and goggles, just things like that. Just think about it. Anything that you needed for school is qualified education expense. And then you are not eligible if you are dependent or married filing separate. So if you're a dependent, that credit actually goes to your parent. We get that question a lot. If you aren't a dependent, then you get to claim the credit. So you can claim the lifetime learning or American Opportunity Credit, not both. And you cannot take the American Opportunity Credit for more than 4 years, like I said previously, so use it wisely. And then the lifetime has an unlimited use. You can go ahead to the next slide.
Yes, sorry, there's a slight delay between slides.
It's
I got you.
okay. So like I said, the American Opportunity Credit is like the better credit. So it's claimable by undergrads who have not completed their first 4 years or post-secondary education as of the beginning of the year. So both of these credits are for like undergrad. So recognized institutions working towards a degree or certificate. So it has to be at a school that's a recognized institution. So universities, community colleges, and then private universities. Like there's all these, most schools are recognized institutions. Usually people don't have a problem with that. So students must be enrolled at least half-time for at least one academic period beginning during 2020. So you must have been in school at least for half of the year. So the first 3 months of 2021, if the qualified expenses were paid in 2020. And then you lose qualification if you've been convicted of any felony drug offenses, like I said, for the lifetime learning credit. Tuition, required enrollment fees, and course materials that the student needs for a course of study, whether the materials are bought at the educational institution as a condition of enrollment or attendance. So it was like those the educational expenses that I talked about. That's really important. When we actually see the form in the next slide, I could explain that more. And then the maximum for this credit is $2,500, so you get $500 more, which can make a difference when you're paying a lot for your education, your post-grad education. So what is a Form 1098-T? So this 1098-T form, it shows you all of your financial aid rewards, and as well as the money that you have spent at the school. So you will get it if you have qualified expenses such as tuition, any fees that are required for enrollment, course materials required for a student to be enrolled. You use the 1098-T to understand your financial aid distribution and educational payments. So this is the form. So the way that a taxpayer looks at this, they just compare box 1 and 5 And like I said earlier, I know they can look intimidating or overwhelming, so simply read the box. So box 1 says payments received for qualified tuition and related expenses. And then box 5 says scholarships or grants. So box 1 is telling you that you paid almost $46,000 for school, and you only were awarded $10,000 for your education. So that means that you paid roughly about $35,000 out of pocket, and you'll only be able to get the credit of $2,500. So sometimes this happens a lot at our school, and it is like a basis by basis per student. But sometimes a lot of our students, they get more scholarships or grants, so their box 5 is greater than their box 1. So when that happens, it's good to have more qualified education expenses. So for example, you have $1,000 extra that you got from FAFSA or from federal or grants, whatever you got, scholarships. And the best way to do it is to try to reduce that number. So think about how much money you spend on books. Once you figure out how much you spent, you subtract that from the extra 1,000, because all of the extra money that you get is considered other income, and then you will have to pay taxes on that. Unfortunately, if you use that money for rent or dorming, that's not a qualified educational expense. So you just have to think of it like, what books did I pay for? Did I pay any online subscriptions for my classes? Did I have to get any specific materials for my classes? And you want to write all that stuff down, all your expenses, so you can lower that number as small as possible. Okay, so filing unemployment income. So a lot of us will be getting this form for this year because of the pandemic. So Form 1099G, box 1, it shows if you've received any unemployment benefits. So unemployment income is taxable and should be reported. However, when you're receiving your benefits, you can choose whether to withhold 10% for assumed tax liability. However, many people choose to defer this amount. I hope most of you clicked the 10% when they asked you to hold taxes or not, because even then, the 10% is actually a little more. So if you did the 10%, then you'd have to pay maybe a little bit more in tax liability. But if you don't click the option, and you're just required to pay the whole tax amount of the money that you got. So unemployment benefits is taxable. But I would like to add that the CARES Act, the money that we got from the stimulus packet, that money is not taxable. So you don't have to pay any tax liability on the $1,200 that you got. So there's nothing to be worried about there. But when it comes to unemployment, you do, because unemployment comes from the state as well as your employer at times. So now I'm going to get to some free filing options. So Daigoro and I were with CSUN VITA. So VITA is a program that offers free tax preparation to people who fall under the following categories. You generally make less than $56,000. Persons with disabilities, limited English speaking taxpayers who need assistance in preparing their own tax returns. So we help a variety amount of people. We do have certain restrictions. We do all tax filing statuses, except if you are married and you want to file separately. We don't do married filing separate. We only do married filing joint. And when you do a married filing joint, like Daigoro said earlier, both spouses have to be present, because at the end of your return, you have to sign that you acknowledged everything was done and all that jazz. So our program has IRS certified volunteers that provide free basic income tax return preparation with electronic filing to qualified individuals. We are fully virtual for this upcoming tax season. This past tax season that was extended, we were half in person and half virtually. So we were able to figure out how to do it virtually, and it's very safe and secure. All your information is protected by PDF, like protected passcodes and everything. So there's nothing to worry about your information virtually. And then we're open Monday through Friday from 9 to 6 p.m. All services are by appointment only. We also offer ITIN applications and renewals. With renewals, I would like to add that you should try and renew your ITIN by the end of the year if you need renewal, because the whole process can take up to 3 months at times. And if you don't finish your ITIN renewal process by tax deadline, you actually lose tax credits. So if you have dependents, you won't get that like $2,000 tax credit for your children and other tax credits. As well as ITIN applications. In order to apply for an ITIN, you must be filing taxes at the same time. So the faster you can get your documents to file taxes for next tax season is the better for ITIN applications, not renewals. Renewals you can do without filing taxes. And then I just want to reiterate one more time that our CSUN VITA clinic is 100% free, and we are here to serve you. Next slide. So there also are other free filing options. So the IRS actually has a free file option, and there is the IRS website if you'd like to maybe take a picture or write it down. But free file, IRS assists in filing your federal and occasionally state taxes for free. So when you go to this website, you see there's a bunch of options. It'll tell you, oh, you make this amount of money and there's these circumstances. So try and pick whichever program fits you and your needs best. I will like to add though, like we said earlier, it's mostly for federal tax returns that you get it for free. State returns can cost you some money out of pocket. And we also recommend that if you don't have the tax knowledge to do your own tax returns, to go to someone that actually has experience in it, just to make sure that you're doing everything correctly, you're not missing anything, because that would be bad if you got in trouble for something so little as you forgot to report some income or something little. So we really recommend to just go to someone, a tax preparer, and VITA, we're a free service. So you just have to make an appointment with us and we will gladly do your taxes. So the IRS Free File program is a public-private partnership between the IRS and many tax preparation and filing software industry leaders who provide their brand name products for free. It provides 2 ways for taxpayers to prepare and file their federal income taxes online for free. And then at the same time, I know when you do it online, there are sometimes like help. You can like chat with someone and ask them really quickly. If you don't have the time to go to someone that can do your taxes, this is a great option. And your income needs to be $69,000 or below to use one of the services. If above, you will be given free fileable forms in which you can file it on your own. So how Free File works, you choose an IRS Free File option from a partner company, prepare and file your federal tax return on their site, and you get an email when they accept your return. The IRS Free File program offers the most commonly filed forms and schedules for taxpayers. So all those forms we went over earlier, W-2s, 1099-Rs, 1099 miscellaneous, Schedule Cs, the new self-employment, 1099 NEC. And then also free tax filing, free with some offers. Guided preparation, simply answer questions, and online services does all the math for you. So don't be afraid if you're not the best at math. These programs they do the math for you. You just put the numbers in the boxes. And that is the end of our presentation. Is there any questions?
Hi, so any other extra questions? Well, this is very informative session. I really didn't know I wish I knew about all of this stuff when I was a student. I didn't know about the lifetime credit and everything. So if there are no other questions, I just want to thank you guys for today's presentation and also remind everyone that tomorrow we have a 12-to-1 financial disasters and recovery program with an AEI, Alliance for Economic Inclusion, and uh, anything else that thank you guys for coming.
Thank you for having us.
Yeah.
There's a couple of questions coming in right now.
Oh, perfect. Let's do the questions. Yes.
So Martes Luna said that they have not received their 2018 taxes. Where can I file this, or who can I talk to? So for VITA, we actually file taxes even as back, I want to say 2016 or 2015. So if you'd like, you can still file. There's technically no deadline if you don't owe any money. So let's say you owed money for 2018, then you would get a tax penalty for filing late. But if you get a refund or you don't owe anything or getting any money back, there's technically no time, like there's no date that you have to have done your taxes by. So if you, I can, it's CSUN, it's vita@csun.edu. That's our email if you'd like to contact us, or you can just go on Google and Google CSUN Vita Clinic, and you can make an appointment and then just specify on your appointment that you'd like to do your 2018 taxes, or you can also wait until next tax season and file both of those taxes at the same time. That is an option. Okay, not sure if this can be answered. Just found out some. Unclaimed property, how do I file it once I make the claim? Okay, so property we don't really deal with at the VITA level just because it's considered passive income. So it's unearned, it's just rental property. So I would suggest to go to an accountant for that.
Also, you'd more than likely have to file to claim the property. File through California.gov. There's a certain place where you go to the controller's office on their website, and you'll be able to, I guess, claim it for taxable purposes.
Okay, so Martinez says that they've already filed their return. They just did not receive money. By chance, did you change addresses or anything? Usually that happens. Sometimes you get lost in the mail. I would just contact the IRS and ask them if you actually were to get rewarded some tax return money. Maybe you weren't supposed to get any and you think you were. So I would just try and contact them. Sometimes the wait line online through the phone can be about an hour or so. Where can we make the appointments? So like I said, if you Google give me 1 second. I can have LAPL give you the link. I hope everyone learned something. I know it was a lot of information. Okay, great. So that is the link if you'd like to make an appointment with us. So we actually have no number to contact right now because we are not in office at CSUN. So the best way to contact us would be through email, which is vita@csun.edu. Is there any other questions? Yeah, it's down there if you can see that. Great. Well, thank you so much for listening to us and taking some time out of your day. We appreciate that.
Thank you, everyone, for coming to today's program. And yes, we're going to be having another one tomorrow on financial disasters preparation recovery, as I mentioned. And yeah, thank you to CSUN VITA. And this is all great information for the upcoming tax season. And we hope to have in January, we hope to have a more of like a panel type discussion on another one on taxes and how to file taxes. So that's coming up soon. Okay, thank you, everyone.
Great. Have a nice day, everyone.
Bye.
Thank you, Carolyn. Thank you for watching us today.
Thank you.